How much are we beginning to rely on artificial intelligence? How has the financial sector been scaling up its use of AI in the last few years? And what are some of the regulatory considerations that this could come with? The financial services sector is going digital. You've all heard that story before. But one of the most important aspects of digitalization, the increasing use of AI in the delivery of financial services, comes with a lot of really interesting implications that need to be unpacked. One that the team here has been looking at more closely this year is ethics, or put another way, how you can build ethical and trustworthy artificial intelligence. I'm Scott Martin from Deloitte Center for Regulatory Strategy, and you're listening to Regulated Radio. I'm really pleased to have Reny, Vargis-Cheriyan, and Suchitra Nair on the show today for our latest Working From Home podcast. We'll be digging into the growth of AI throughout the financial sector, asking what some of the biggest regulatory concerns and challenges around its use might mean for firms, and talking about the key questions that everyone in the sector needs to be asking themselves right now. This is a show that's all about the future and how we can face one of the most interesting questions about new technology. So let's get going. This is Regulated Radio. I think we could have a whole podcast series about the way that artificial intelligence is changing the financial services sector. We're seeing all around the world that firms and regulators have been racing to keep pace with the newest solutions and the most advanced AI capabilities as they're emerging. Now, there's certainly a lot of good that AI can do, things like improving human decision-making and the early identification of problems, but there's also a host of ethical and risk factors that need to be taken into consideration as well. The team here have recently published a paper talking about how we think firms need to approach this issue, and if you're looking for a good read, you can find it at deloitte.co.uk/trustworthy AI. But today we're going to get to speak to some of our experts in this subject. As mentioned at the top, I'm really delighted to have Reny Vargis-Cheriyan joining me now. Reny is the partner leading Deloitte's insurance risk analytics practice, and she helps our clients understand and implement the latest AI and advanced analytics solutions in the market. Reny, welcome to the podcast.
Thank you very much, and thank you for having me.
So Reny, from your experience working with our clients, how are you seeing financial services firms use AI at the moment? And how do you see them planning to leverage it in the next, say, 2 to 4 years?
Yeah. So, I mean, it's a good starting question because if I reflect back in the past 2 years, what a lot of our clients and financial services organizations have been doing versus what we think that they're going to be doing in the next 2 to 4 years will be very different. So firstly, a lot of my focus is helping a lot of insurance clients we have in the UK around the application of AI. And what we've seen in the past couple of years is a lot of trialing, a lot of testing, creation of AI proof of concepts, POCs, POCs, as I would call it, and creating a business case in terms of how can they really scale and apply this into businesses to create that value and that benefit. And this is really where we see the change happen from the past, where it was all very much trial and testing, to now the next 2 to 4 years where they will scale. Now, in terms of how they plan to leverage it in the next 2 to 4 years, or where, let's answer the question on where. I do see it, at least for a lot of my insurance clients, I see it in two different aspects. One is where traditionally there is existing statistical, actuarial science techniques that have been applied, and upgrading this with AI or AI techniques and less traditional data to feed into processes such as pricing and reserving and underwriting and even capital modeling. Now, the second aspect is actually utilizing AI in very, very newer, or I'll say newer use cases where there was no model in place previously. It was all very much manually driven with lots of people driving the end-to-end process. So this is where AI really comes into its power and delivering a big return of investment to a lot of our clients, because this includes the automation of processes such as claims and complaints, and also around sales journey. And one of the big things that you will see, and I've seen this not just here in the UK but globally, is this whole emergence of digital agents and having these agents really drive your end-to-end sales journey. And this is one that I do expect a rise of in the next 2 to 4 years. So we are seeing the beginnings of both of these as companies or firms are experimenting with POCs to seeing what actually works.
All right. So as I mentioned in the intro, today we're focusing on the concept of trustworthy AI. Reny, can you explain just what that means and why is it an important concept for financial services firms to think about now?
Yeah, so firstly, modeling is becoming generally more important in any decision making process, whether it is in a fully automated process or if it's to augment a human that's central to a decision making process. So because of this, as well as all the relatively complex and potentially opaque nature of data and models, risk of using these models increasing. Trustworthy AI is around the concept of making AI or any modeling more accessible in terms of understanding, being more accurate and more ethical, therefore the term more trustworthy. Now, as we move towards AI models that are replacing these manual and fully automated processes, one of the key areas that I do think that will heighten this concept of trusting our models is where it is directly impacting end consumers. So, some of the things that we've been working with a lot of clients is around using past behaviors and using your digital footprint to model underwriting or personalizing when you buy an insurance product, having a more personalized price based on those behaviors and digital footprint. And so we need to make sure, or firms need to make sure that any decisions processed by these models are understood and managed. So one of the very common questions or debate that I have with a lot of my clients and also my team is that if a human, let's just imagine a human driven process right now, we are relying on the human to make the decision. But can we really understand how the brain works in that decision? And we put a lot of reliance on it. However, we have come to accept a certain type of behavior socially and in business. And therefore get fewer surprises from human decisions, at least from an insurance perspective, and that's what we're seeing. The challenge with modeling is that while it was originally designed by human, there are a number of issues that can arise, including unintentional use of the model, biases, model drift over time, incorrect data, and simply not understanding the model or its limitations. Therefore, it is key that we need tools and processes to fully gain the trust of a model.
It's really interesting to think about some of the implications of what you're saying. So thanks for that. I'd like to bring in our next guest now and a regular on the podcast, Suchitra Nair from the Center for Regulatory Strategy. You, of course, last heard her on Regulated Radio right at the start of lockdown talking about cloud computing. Suchitra, it's good to have you back.
Great to be back, Scott.
So, Suchitra, we've just heard from Reny about what's happening in the industry, but we equally know that trustworthy AI is something that regulators are also turning to in their own work. Can you tell us what you're seeing regulators in the EU and the UK do about this?
I think it's helpful to start with what do regulators mean by trustworthy AI? And essentially, there are three pillars that form the foundations of how regulators think about trustworthy AI. Is it lawful? Is it compliant with laws and regulation? Is it ethical? Does it respect ethical principles and values? And is it robust? From a technical perspective, is it resilient and secure? Is it accurate and reliable? And I think that's a really helpful starting point to think about how do regulators define and work with the concept of trustworthy AI. The challenge for firms really is when they pick those concepts and try to apply it to specific use cases. Here, the problem really is threefold. Different regulatory requirements from different regulators, an evolving regulatory landscape for AI, and evolving tools and standards and best practices in industry. So let me take the first two in turn. So firstly, for specific use cases, if you look across different regulators, they have slightly different objectives. So if you take conduct and data protection regulation, for example, both sets of regulations seek to prevent consumer harm or negative outcomes. However, when you apply it to specific use cases, the slightly different perspectives create a challenge for firms. For conduct regulators, preventing consumer harm means ensuring that customers are treated fairly and have access to products and services that suits their demands and needs. So for data protection regulators, their main objective is to ensure that the information rights of customers under GDPR are protected and that data is used in a lawful, fair, and responsible way.
But just to jump in there, how do these different perspectives come together in a typical use case?
This is what we explore in our recent paper on Trustworthy AI. We use an example, an illustrative example, where an AI-enabled solution is used to detect and support vulnerable customers. And that's very topical in these times. And in that use case, we explore how this challenge comes together. But it's not all bad. In some instances, there are areas of alignment between conduct and data protection regulation. For example, if you take the case of fairness, bias, and discrimination, both regulators expect AI systems and the data that's used to train them not to be unfairly biased or discriminatory against specific groups of people. It's the same with transparency requirements. Customers need to have a clear understanding of what solution they're working with, how the decision was arrived at, and they need to be able to challenge and trust the output of the AI systems. However, the other side of the coin, of course, is when you work with two sets of regulation, which were not specifically designed for AI solutions, there can be uncertainty around interpretation, especially when you don't have, for example, a data protection parallel to a conduct regulation. So what do I mean by that? So again, going back to our paper and the case study we use, you need to use consumer data to detect vulnerability to comply with FCA rules. At the same time, you need to have a lawful basis for justifying how much personal data you use to determine vulnerability. And we again work with another limitation in GDPR, which is the purpose limitation and data minimization around GDPR, where you can only use data that is absolutely necessary to achieve a purpose, even if processing additional data may lead to a fairer outcome. So you can immediately see the challenge. More data is good to detect vulnerability, but actually, do you need as much data is the question that GDPR poses. And that is why when you think about designing AI solutions, it's helpful to look at those pieces of regulation right from the outset in the design phase of the AI solution, so you can effectively tackle both the areas of alignment and address it in one go in a comprehensive way, but also make ethical decisions around how you want to interpret areas of uncertainty between two pieces of regulation. So there's a governance challenge there immediately and a design challenge. The second point in terms of the evolving regulatory landscape, both in the EU and the UK, we expect more AI regulation. For example, the FCA is going to put something up with the Alan Turing Institute around transparency. So for firms today, they have to work with existing regulation, but also an evolving landscape.
So one follow-up question, Suchitra, for you on the regulatory side of things. One thing I'm seeing is that the concept of AI ethics is increasingly being brought up when discussing how to develop AI solutions that are both ethical and deserving of consumer trust. What are you hearing regulators say, or in fact seeing them do, around AI ethics in particular?
It's an interesting challenge, isn't it? Because ethics, of course, is an evolving field, especially in FS. But at the heart of the problem or the challenge really is that building a trustworthy AI is about building systems or AI systems that are not only compliant with regulatory expectations, but that are also ethical, so that it goes beyond compliance to doing what is right for the customer. So in the UK, both the conduct and data protection regulators have acknowledged that the use of AI presents significant ethical considerations. And they're both leading contributors to the AI ethics debate. But what we do know is that the FCA, despite all the COVID restrictions and trimming down of their work agendas, AI is very firmly in there and a priority for the regulator. And this includes, for example, how firms use algorithms to price services and products, and the fact that they do so ethically and have adequate controls in place to prevent bias and discrimination. So that's one side of the story. But at the same time, again, regulation is essentially technology neutral. So whatever we have today around conduct or data protection regulation is still very relevant to firms and they have to comply with it. So what does that mean for firms? We expect regulators really to focus on three core areas. One is governance and accountability. So going back to the role of the board, does the board really understand the ethical implications of the use of AI? Have they given the go-ahead? Has there been the right level of debate at board level around the ethical policy of the firm? The second area is transparency and explainability. And that really is focusing on customer communication and information about when and how their data is used or an AI model is used and the potential implications. And clearly, the real challenge here is when things go wrong. Does the customer get the right level of transparency and explainability around that decision? And the last point, again, that the regulator or supervisors would focus on is around the customer-centric approach to AI, and really encouraging firms to think about whether they've looked at the whole problem or the life cycle of the AI decision through the customer's eyes and thought about it right from the onset of the design phase. So those are the three core areas that we expect existing regulation, existing supervision to focus on. And the last piece, I guess, to think about is the fact that there will be instances where AI innovation has outpaced the policymaking process. And that is why firms really have to rely on their ethical frameworks to guide firms' behaviors in various situations, because the law will be silent or will be subject to interpretation. And firms need to manage those regulatory trade-offs, say, for example, between privacy and accuracy and fairness.
Okay, thanks, Suchitra. And Reny, turning back to you, this is clearly a very new area for the financial services sector to figure out. And I'm wondering, from your own experience working in the sector, what are some of the leading practices around an ethical approach to AI that you've seen firms adopt? And equally, what are some of the most common challenges that you can observe?
So good questions, Scott. Firstly, this is such a new area that we don't actually see many best practices yet in the industry. Most firms, and the good thing is actually most firms have begun to have conversations at risk committee and board level around this topic. What we're also seeing is, or what we're seeing are risk teams and model validation functions looking at how to upgrade existing tools and processes, but slowly at first in line with their AI use cases, also slowly being scaled up. So the good news is that they're starting to look at it, but it's still very much at early stages. However, we think that these functions should be having more discussions now, especially where looking back at the past 2 years, as I mentioned, and where we are right now in terms of the evolution of AI. Discussions need to start taking place around the complexities around AI risk to be ahead of the curve. This includes being on top of the emerging regulation, as what Suchitra was talking about earlier, and also being fully engaged with their data science teams. And what we're actually seeing at the moment is that many data science teams and innovation functions are operating very separately to the rest of the organization. I see this personally at most of my clients, and actually we see that a lot at Deloitte too. So part of it is a new topic, but raising the awareness around some of the risks that the AI brings to the table, and risk management needs to be closer to their developments and ambitions. We also think that in the next 5 years, AI-driven business models and their risk will be a key topic at the board level. So the processes of getting the board aligned with this and giving them the tools and the training should start soon, if it hasn't already. AI comes with a lot of risk, not just from an ethical point of view, but clearly this is an important part. A CRO and a head of risk will need to understand how AI affects customer conduct deeply, as Suchitra also expanded on earlier, but also all the other risks around operational and operations and finance.
All right, Suchitra, as a repeat guest of the podcast, you'll know that we always ask our guests to make predictions near the end of the show. Looking ahead then, what more do you think we're likely to see from regulators? Or what more would you say is needed from regulators for the industry to scale up with confidence with AI solutions?
Given that it's a prediction, I'll make a bold one, but an easy one. Look, we know AI and the use of data will remain a priority area for regulators for the next few years. Both at EU and UK level, we have seen a lot of interest in what the policy framework should be for data-driven tech innovation, but also the safeguards. So, what is the ethical framework around this? How should data be protected? And how should consumers be protected? And overall, both in the UK and EU, we've seen the shift towards good consumer outcomes, not just preventing bad consumer outcomes. So I expect that to flow through to AI and the use of data as well. The other interesting observation or trend really around both AI and any regulation to do with data is the fact that it's going to be cross-sector, so both at UK and EU level. And so we've had to adapt in the EMEA Centre for Regulatory Strategy, where previously we only had to look at FS regulation. We've now got to look at the EU digital strategy, the broader data strategy. And so for firms, again, they have to broaden their regulatory horizon landscape to catch those broader cross-sector policy pieces that are going to come through and have an effect on their AI or tech-enabled solutions. And I think, again, looking closer at the problem from a day-to-day supervision of AI perspective, or for information sharing or for policy alignment, all of this requires a cross-sector approach because, of course, we have vulnerable customers in banking, we'll have vulnerable customers in the utility space. So all these require a joined-up approach across sectors, and we'll see that coming through. The last, more negative prediction, is around harmonization. So when I look at tech more broadly, there are calls for international harmonization of data. But I think when it comes to ethical AI, just given the cultural differences across the US, Asia, and Europe, the cultural differences to do with sharing data and the use of data more broadly to support the provision of products and services, I can't see the level of harmonization that firms are calling for across jurisdictions when it comes to AI and ethics. So I think that's one for firms to watch out for, that ultimately it might just go down the conduct regulation route where different countries have their own framework and have their own interpretation of what is ethical and what is not. So that's something for firms to watch out for in the near future.
And Reny, I'll give the final word to you. If you step back from the content we've already discussed so far on the show, what would you say are the immediate focus areas for financial services firms looking to scale up their use of AI solutions?
Yeah, so firstly, where firms are right now is a lot of firms are at the point where they are looking in terms of securing investments to take a lot of their POCs, the things that they've been working on for the past couple of years, to the next level of scaling. Or on a wider education of the firm to help with embedding. So it's all about taking these AI applications and embedding it as part of a wider enterprise level process. And with that in mind, there are two parts that I would say that where the focus should be. Number one, from a trustworthy perspective, pick high value AI proof of concepts or POCs, but also from a risk and reward view, when you're making that decision for that pivotal point in terms of scaling, is it worth additional risk to scale up that particular use case? And if so, how do we control it? And I think that is really key, because the last thing we want any of our clients or any of your organizations out there to be exposed out in media or by any channel to have had a model or an application that has algorithmic biases built into some of those processes. That's not great when it makes headlines, and we've heard a lot of that in the past year. So I think that risk reward view is quite key. From a point two that I wanted to raise in terms of what else to focus right now, less on the trustworthy AI side, but more in terms of my pain point. I think one of the key things I would always recommend to a lot of my clients is when you're thinking of scaling is invest in software engineering skill set and resources, because a lot of people think when it comes to AI, it's a lot of the data science capability, but that's not necessarily the best people for the next stage of this journey. The data plumbing aspects of it and connecting with other systems, especially when you have a lot of legacy platforms, can be difficult. So getting that skill set right to help you scale will be critical. So those are the 2 key points. And I think finally, just clearly understand your limitations, in the model as well as with any technology that our clients adopt. It's not magic and only as good as the data it's fed.
Certainly an important list of to-dos there. Reny, Suchitra, thanks so much for coming on the show.
It's been a pleasure. Thank you.
Thank you very much, Scott.
And there you have it, a lot of food for thought on this critical issue from 2 of our financial sector experts here at Deloitte. I hope you're all making the best of these increasingly colder days. I think we've all ditched iced lattes for hot coffees by this point, it's probably safe to say. But one thing that will always be cool is listening to a great podcast on financial services policy. So we're going to keep them coming here at Regulated Radio. And if you have any thoughts on topics we can tackle in our Working From Home series, please give us a shout at regulatedradio@deloitte.co.uk. We really would love to hear from you. And remember, if you like the show, hit the subscribe button to ensure you receive notifications about our next episodes. And if you're already subscribed, you can give us a review on wherever you get your podcasts. But that's all for now. Thanks so much for joining us, and you'll hear from us again soon.